Welcome back. You're watching Stockwatch with me, Simon Brown. Joining me to take your stock-related questions tonight, David Shapiro, Sasfin Securities, Wayne McCurrie from FNB Wealth and Investments. Be sure to send your questions. Email stockwatch@bdtv.co.za or via SMS 41392 or on X using hashtag Stockwatch. Gents, appreciate the time. Let's kick off with some market news from today. Lewis, David, trading update 45 to 55% higher. I've always said Lewis is a bank that sells furniture, but man, do they do it spectacularly.
That's exactly what happens. I mean, I don't think it's on the furniture that they make the margins. It's on the financing that they make their money. And if you compare these numbers with what came out of ShopRite, yes, okay, Bazaars is picking up a little, but nothing like Lewis. These are really good results. And it trades at nothing. Yeah. I mean, you can pick the share up for nothing. Yeah, good number.
Wayne, that's the point. You get a good dividend yield. They're constantly buying back shares in the market. It's a great operation. This is surely a stock worth considering for a portfolio.
I would think so, yes, and especially going into the cycle we are now with lower interest rates. I mean, it might take a little while, but their bad debt provisions will start to come down. They'll be able to sell more. Their customers will be able to afford more. So, luckily enough for SA consumer-orientated shares, we are in or going into a far better period than what they have experienced for a long while now. And, all credit to management and the company. It's a very good set of results.
Yeah, no, it is, and it is management. Wayne, let's stay with you. Astral came with an update. I mean, the numbers are giant, 200 and something % higher. That more than anything tells me about the cyclicality of food producers, and in particular, chicken. I mean, it's a sector I've managed to always stay away from, fortunately, because I'm not sure I'd still have fingers left. It's wild and volatile.
Yeah, look, this is one thing that sort of, as I've progressed in investments, these primary agricultural producers, there's just too much outside the control of management. They are subject to weather conditions worldwide, surpluses, dumping, and this is the food. I mean, the general food commodity producers, the fish, the chickens, even raw maize. This is an incredibly difficult sector, and I also have steered clear of it for many, many years now. Yeah, it's just not worth trying to guess that cycle. And there's disease, and it's a very difficult industry.
Yeah, I mean, we can throw fish into that, and then the wind blows the wrong way. David, primary care, I mean, it is a tough space.
Incredible. I like AVR because AVR aren't involved other than with Irwin and Johnson. And the reason is that they make biscuits and they make tea, but once you start to get chickens and once you start to get sugar or wheat, as Wayne says, you're looking for trouble. As I say, if it grows in the ground or tries to run around or fly, just leave it alone.
Yeah, I'm looking at a 10-year chart. It's pretty much flat over a decade. And you've made some nice dividends along the way, but it has been a tough one. Wayne, I want to come back to you because a question came through saying, surely Intel must be interesting at this point. We've got the CHIPS Act in the US. We've got the US Defense Department saying they only want to buy from American manufacturers, which is Intel. And if memory serves, I think it was your stock pick maybe 2 or 3 weeks ago.
Yeah. No, it was my stock pick, and simply because the share price had come down so much, and for those very valid reasons. There's going to be no shortage of demand for chips, especially with America having this chip war with China and exporting the chips. And even if you don't enact it by legislation, American companies, American consumers will want to buy goods with American chips in it. So yeah, I think the share price is still worth buying. I still quite like it.
David, I mean, it's not an NVIDIA, but there's chips in everything these days. I mean, literally.
I think they want to reposition themselves and even start manufacturing for, rather than their own chips, manufacturing for others. And you heard what Trump said to TSM, to Taiwan. He started to accuse them of all kinds of things, of stealing Americans, jobs and all that. That's why you would have seen TSM down a little bit the last few days. So, but I agree with Wayne. I think that as the economy starts to turn, you're going to get a pickup from a very low position. So Not the best chip company, but I think on a turnaround, a fairly good bet.
Then what about Remgro? An email came in, held it for 20 years. When does Mr. Rupert start unlocking some value? David, if we go back, forget 20 years, if we go back 40 years, this was a blue gem in your portfolio. It's been disappointing lately.
Yeah, you got everything out of it. You would have got British American Tobacco.
Yeah.
You would have got Goldfields. You would have got Richemont was the big one. And others that they have, unbundled. At the moment, it's a difficult company to understand, and you can understand why there is a discount. You can't really get a grip on anything. They've got RCL, the food, and then they've got MediClinic. I don't think those are two of the most attractive businesses to get in. Oh, they've got Total Energies, and they've got a whole Wispico, I think, and a few other businesses, but there's nothing of the magnitude that they've had before. Yeah. So, they're battling a little bit.
Wayne, your take on Remgro?
Yeah, look, we'll have to still see whether this, I think they are going to appeal on this Vumatel, Mazak, dark fiber, I forget its name now. It is Mazak, isn't it?
Yes, Massive, I think.
Yeah, Massive sale. I think they're going to appeal that. Look, it's big discount, but there's also big discount in Renette. And these are not bad underlying investments. So, maybe if you want to look at a discount unbundling, I don't know, discount narrowing that the companies may do, because I know it annoys them hugely that there's this big discount. We can ask Patrice as well what he thinks about the discount in NAV.
Yeah, and you mentioned Renette, because of course they've got British American Tobacco, which they've been selling down, but they've also got that pension business in the UK, which is quite an attractive looking business.
Pension business. Yeah. It's actually a very nice business, and I actually like that business. And it's a relatively secure investment, I would think. I think your returns over time from that business are quite well known. So maybe Renette shouldn't be at such a big discount.
Wayne, let's stay with you. You mentioned the deal with Dark Fiber Africa. Of course, that was Vodacom. Question came through, of the telcos, which was preferred, Vodacom or MTN?
Look, I'd go for Vodacom, even though MTN is significantly cheaper. There's just less underlying risk with Vodacom. Look, both industries are ex-growth. David will recall 20 years ago, 25 years ago, these were the growth industries. These were the AIs of their days. You just couldn't own enough of the shares, and these things were just generating profits. But, over time, everyone's got a cell phone, there's less growth. And also over time, governments have restricted the selling price, essentially. They want to get the price of data down for everyone. So both these industries are ex-growth, and both these companies are ex-growth. And they've tried, to find growth by going to other countries with very limited success so far. So I'll go for Vodacom, even though MTN, you've just got to, I suppose, remove some of the uncertainty regarding Nigeria, what's going to happen next, and some stability in the currency. The currency totally and utterly fell out of bed. But I'd rather go, if I have the choice between the two, I'd rather go for Vodacom.
Yeah, that MTN, the Naira, and it's not going to get, to use the analogy, back into bed. It has weakened. David, a telco, MTN, Vodacom?
I'd go Vodacom as well. And I just want to add, we always say this, the problem is that these companies also have to lay out huge amounts of money to keep up with technology, from 2G or whatever it was called in those days, to 3G, to 4G, to 5G, to 6G. And it entails an enormous amount of capital. And then everybody wants to go to Starbucks and get data for free. No one wants to pay for it. So you've got a product that they want, but they don't want to pay for it. And your margins are cut down. But I must say I'm a little disappointed in this deal, not simply because of where they wanted to go with Vumatel and dark fiber. In other words, provide data into poorer areas, extend their reach. And I think sometimes the Competition Commission is so kind of preoccupied with with money or balance sheets rather than what they want to achieve. I think it's so essential, and I'm making a political statement. So essential that everybody has access to modern technology, to just to live and and to promote small businesses. So I hope this goes through, because I don't think the intention was all about money.
Yeah, no, I take your point. And certainly, Vodacom, we haven't got the full statement yet. We need that. And then Vodacom has said that they would probably appeal. David, staying with you, data tech. I have to be honest, all I remember about data tech was that the start of the dot-com boom collapse on the JSE back in 2000, where Jens said something to a Deutsche Bank analyst.
Yeah, that goes back to the late 1987. When we had Data and Data Tech, both of them vying for the top position. We've lost touch with Data, but Jens is still battling around there. We've just lost kind of touch with this business. It just hasn't got the same kind of a draw or appeal that it used to have in the late 70s. A lot of other tech companies have overtaken it. And I'm not quite sure what they do. I don't know if they just drop boxes today, sell something that comes in a box and you plug it into your computer. I don't know. I've lost touch with what they do.
I think they do a little bit more, but I'm not quite sure. Wayne, do you have deeper insight into data tech?
No, unfortunately, I do agree with David. It's just not a company that we look at, really.
Yeah. Yeah, and once upon a time it was. I mean, as you say, it was the darling. And in that 90s tech boom in South Africa, and we had all of them. There was eData, and there were dozens of listing, Brainware, and
that's when we had 64K in our computers. That was big.
There was that too. Yes, and I had a 56K dial-up modem. Question coming through, David. Let's start with you. Old Mutual, it's been lagging, and I've got to say, if I look at the Coronation update yesterday, they're different. I mean, Old Mutual's a life insurer, Coronation's an asset manager, but of course Old Mutual has assets to manage. I thought Coronation was maybe a little weak. Your take on Old Mutual? I mean, it's been lagging. Is the opportunity here?
I don't know. Most of these companies will battle, I think, until we start to see a turnaround in the economy. No one's going to run and knock on the door and say, I want life insurance or I want to invest. You've got to send out your troops to go and bang these people on the head and make them invest. It's not the kind of product that you're going to line up and want. And I think until we see a considerable improvement in the economy, I think these businesses will be under pressure. In other words, and they sell to a vast number of people around the country. And I don't get a sense that, things have improved that much yet. They might turn around when interest rates come down and so on. So I think, for the meantime, they'll just bumble along, and improvement with the way the market's going. Market's up, yes, they'll improve. But in terms of volume increases, I don't know.
Wayne, they also, of course, decided to do a bank, which is, we have so many banks these days, but Wayne, Old Mutual?
Yeah, look, just on Old Mutual, I also agree on the bank story. Remember, they had a bank, eh? There was an Old Mutual bank, I don't know, 25 years ago?
Even more, maybe, yeah.
Yeah, there was an Old Mutual bank, and I don't understand the reason why you want to open a bank. It's an overtraded market. And then just coming back to the life assurers, it's also an overtraded market. Look, these companies aren't bad. They've got lots of reserves. You're going to get probably a fairly steady dividend and a fairly steady income. But this is a highly competitive market. They're just not exciting shares. And if I had to choose one, I think I'd rather choose Sanlam or Momentum over Old Mutual. But it's just not an exciting sector in total to go into and look at. It's not bad, but But I don't know. I think there are probably better companies to choose.
And I take your point to Momentum. And Momentum, I don't know if it still is, but it was at a nice discounted embedded value. There was a sense of energy coming through, and you've seen it to a fair degree in the share price.
Yeah, the Momentum's done quite well. Look, it's off a relatively low base. There were lots of, I suppose you can say, easy pickings for, over the last 3 to 4 years. It now becomes substantially more difficult. But I would rather take Sanlam or Momentum over Old Mutual.
Wayne, I'm going to stay with you. PGMs, they will turn. Maybe the bottom is in. Certainly we've seen palladium do some action. Question coming through, and I know you've picked Anglo Platinum a few times, but someone was asking, what about Implats to play the PGMs over the next 3 to 5 years as we wait for that cycle to turn?
Well, Implats is just more geared. So if you want more upside, take it. I mean, Implats is at 52-week highs at the moment. Yeah, I still think it's going to turn. Only time will obviously tell. I still think there's a lot of upside on the shares, obviously. And when we look at platinum and palladium, the actual prices, they're both above $1,000 an ounce.
Yeah.
There's lots of talk now of banning the Russian palladium, although I don't think that'll actually happen because there's no substitution. And that's the good thing about the PGMs. There's no substitution here. You know, if you need them, you need them.
Yeah.
And I think the market will actually change. You know, the battery EV story seems to be delayed a little bit. And the PGMs themselves are cutting back on production because they're not making money. And, you know, these companies, when you think back, and David, we'll all remember it, you know, the cost of COVID to the country, the ever many hundreds of billions, was paid for by the platinum companies' mining profits, because that came in. Because when you look at our fiscal position, it didn't get, you know, it didn't get slammed during all the COVID expenditure because there was excess tax coming in from the platinum companies. I mean, these companies were.
Oh, we've lost Wayne.
Wayne, we've lost your mic for a moment. I remember that. There was, about 150 billion a year over 2 years. David, I mean, PGMs, I mean, they do turn. We remember the pandemic spike. We remember the 2006 spike. It certainly happened before, and it'll happen again.
Yeah, technically they're pointing in the right direction. You know, if you look at the charts, you can see the turnaround. And I don't know whether this is the kiss of death or not, but I see Coronation turned around, you know, having been sellers have turned buyers and that. So I think, you know, renewed interest being sparked certainly by the EV, which is not fulfilling its promise and moving towards hybrid. So, yeah, it's been performing well. And they came out with production numbers, which were slightly down. So today you'll see it's falling. But you know, from a technical point of view, I think the bottom's been made already.
Yeah, as you say, it's pointing the right way. David, let's stay with you. Arsenal Mittel, sure. I mean, this is another one. We can go all the way back. What, this was Iscor, right? And then Iscor broke into Kumba, Arsenal, and Ixara, I suspect.
Yeah.
Arsenal Mittel, it is a shadow of its former self and in a heap of pain.
There's just too much there. You know, there's no local production, imports. Everything's wrong with this company. It's just sad. I think that if they sold the tires on the trucks, they'd get more than the market value of where Arsenal Mittel is trading at the moment. But we put it in the same class as the chickens and you know, the chickens and wheat and fish and everything. Very difficult market to read. You know, it looks incredibly cheap, but there are lots of issues here. And you can't call it from one quarter to the next.
Yeah, Wayne, Arsenal Mittel, because of course there's also, I mean, you're competing against China, accusations of them selling steel sort of, you know, below cost and like just to keep the steel mills open. I mean, is there, I mean, it's what, a share, it's a penny stock, it's rand and some change.
Yeah, look, I think you've got to sit back and say, why have we got Iscor?
Yes.
And we got Iscor because this was the apartheid government wanted a steel producer in South Africa, and it was protected until the early to mid 1990s.
Yeah.
And the fundamental problem with ArcelorMittal, and I'm still trying to work out how ArcelorMittal got control of Iscor, because one day it was Iscor, the next day it was ArcelorMittal. But anyway, it's just too small to truly compete on a global scale. When you look at the size of the Chinese steel mills, I mean, Arcelor is just too small and there's not enough domestic demand to support it really. So unfortunately, it is actually, it can't compete.
Yeah. Yeah, no, not in the global market, not against the Chinese. What about Aspen? We chatted about Aspen a few weeks ago. Adrian Sarda's always saying, you know, they've got their Gqeberha plant. They need to get that ramped up. They need to get the capacity up there. Share being under pressure. Wayne, Aspen as an opportunity?
No, I don't think so. Aspen, unfortunately, has a little bit of a history of, you know, next year is going to be great. This year is not so great. but next year is going to be great. And I'd rather steer clear of Aspen.
They're making production out of the GLP, which are the weight loss drugs and the obesity drugs and diabetes drugs. They're making I think they're making the pens and that. If they can get into that and increase capacity for their production units, yes, there's going to be quite a big drop to bottom line. But as Wayne says, we're always waiting for next year. And maybe one day next year will come, but I think some of us have lost patience.
I take your point in there, of course. And Stephen Sard, apologies, not Adrian Sard. David, let's stay with you. Question came through. Please ask David and Wayne what their preferred luxury stock is, either locally or globally. If you had to pick one luxury.
I like Ferrari. I mean,
race.
But Ferrari and Hermes, but I mean, Ferrari, they just come out with a new model. It goes at $3 million a trot, whatever it is. Before you even look around, it's sold out.
Yeah.
Done. And when you've got a model like that, when you've got a business like that, where they have such an incredible brand, you've got to go, and the margin, it's well run as well. Don't think they're frivolous about this at all. They live up to, maintaining their name. So Wayne's the man you've got to talk to about, when it comes to motor vehicles, and he's the man. But from a luxury point of view, I think this is unbeatable.
Yep. Yeah. And next year they got Lewis Hamilton in the red Ferrari. That's going to be huge fun. Wayne, your preferred luxury stock?
Look, I think I'll go for LMVH. It's a toss-up for me between LMVH and Richemont. I mean, David's talking about Ferraris, and now first one to qualify. I only owned old Ferraris, so 70s and 80s Ferraris. The actual car itself, there were only 2 happy days.
2 happy days.
2 happy days. But Wayne, you probably sell that for more than you could buy it. I mean, that's
way
why it
more.
maintains maintains its value.
Make no mistake, I sold both cars for significantly more than what I bought them.
Yeah. The happy day is the day you buy it, the day you sell it. And No, I know that exactly. My father used to be all over cars as well and spend his life, and it was the same story. Day you buy it, day you sell it. David, let's go to some stock picks. We had Alphabet out, of course. That's Google, that's YouTube, and all the other bits and pieces. Good numbers.
That's for that reason. I think they surprised us on the upside, particularly YouTube. The cloud business doing incredibly as well. There were a lot of detractors, people worried about it. And even on the search side, they're doing well. And it's also portent, I think, for other companies that are going to, report soon. So it'll slow down, make no error. We're going to see a slowdown in the whole AI issue, but I think we can extend it for a few more quarters.
Yeah. No.
So,
cool.
I'm going what's fresh in my mind, Alphabet.
Alphabet, yeah. You were reading the results this morning, ergo it pops up. But as you said, it was a good set of numbers. We are seeing those coming through so far. And, of course, later we've got Meta and Microsoft, which will tell us a bunch. Wayne, you haven't gone with the stock pick, but you've got your minute.
Yeah, just very quickly. The reason why I haven't done a stock pick is that there's not a bright idea every week. And every week you got to find something to pick, and someone might put money behind it, and a lot of them are going to be wrong, and people are going to lose money. So it's almost uplifting to not have a stock pick.
To say thanks, but not today.
Not today, no.
Yeah, but we'll leave it there. Wayne, this is your last show. You are taking your retirement. You're going to spend time tinkering with your cars in between the 2 best days. From all of us here at BDTV, and I think I can say for the viewers, humongous thank you. It's been a privilege and an honor picking your brain for, I don't know, I've been doing this show on and off 14 years. Really appreciated it. Thank you and all the best, and I'm sure we will see you around. But with that, that's all for tonight. Hey, we're going to miss him.
Everyone's going to miss Wayne.
Yeah, we would have walked bubbles, but it wouldn't work. We can't do remote bubbles via Zoom. So we'd have to do that in person at some point. But you will be missed. We really appreciate it. That's all for tonight's Stock Watch. Thanks to our guests, David Shapiro, Sasfin Securities, going with Alphabet, Wayne McCurrie, F&B Wealth and Investments, saying sometimes there isn't anything, and that's perfectly fine too. Up next, the close. Stay tuned.
Thank you.